Welcome back. Well, the first company on our radar is Cohance Lifesciences. The company reported a healthy performance in the CDMO segment, but margins have been coming under pressure. And before we sort of get to more details, and of course, we'll have Vivek Sharma, Executive Chairman at Cohance Lifesciences, joining in. Just want to tell our viewers a little more about the company as well. This is formed by the merger of RA Chemicals, Arva, ZCL, Suven Pharma, and a bunch of others. And it's the first time the merged entity is reporting numbers, so it's important to understand the business. The main segments in which Cohance operates is CDMO, API, and specialty chemicals. For now, let's come to the numbers. Let's flash the numbers for you. Revenues up 20%. The margin has seen some pressure in the fourth quarter. Margins actually come down from 36% to 31%. But if you talk about the FY25 full year performance, then revenue is up 9%. And again, the margin is under a bit of pressure. So let's understand the business model and the outlook going forward. Like I said, we've got Vivek Sharma with us. Mr. Sharma, thank you very much for joining in. So give us a sense, let's break this down in terms of CDMO, which is your big business, and you expect that to be the biggest, I think 90% of your revenue. You're targeting that by 2030, 90% of your revenue will be from CDMO. Let's look at the performance right now. Tell us a bit more about the top line growth and why margins have been under pressure for you in the fourth quarter and the year as a whole.
Good morning, and thanks for giving me the opportunity to come and talk again. So I think let's talk about Cohance brand. You started with that. So we're very proud that today we are talking as one company, one brand, one new logo, one vision. This has been a journey that has taken almost 5 years to bring 6 promoter-driven companies to combine into one platform. That is now actually sitting at a mid-cap company with the current valuation, right? So it's a huge accomplishment for the team and the support that the investors has given and the customers have given. In our company currently, there are 3 main segments: CDMO segment, which is what you would like to talk about, a specialty chem segment, and an API plus segment. All 3 segments are growing, and all 3 segments we anticipate will continue to grow to achieve the accomplishment of our long-term vision that we are demonstrating. As part of growth and as part of integration and as part of internationalization, we have been investing capital in certain types of resources to really build a long-term pipeline and to expand our customer base. As you know, we acquired 2 technology-driven CDMO last year, Sapala in Hyderabad and NJ Bio in Princeton, New Jersey, that has given an upper leg in terms of technology and ability to serve customer on high-end modalities and solve complex problems that companies are looking at. We have also invested in commercial capabilities in the West. So we've hired 5 highly experienced and highly capable commercial individuals that sits in the West. We've hired a highly capable individual.
Mr. Sharma, sir, I'll apologies for interrupting. I'll request you to be a little more brief because this is pre-market open. We'll only have 5 minutes on the call remaining.
Okay.
Very quickly to get to the numbers. Top line growth, like I said, for the year as a whole, if I look at the total business, you've grown about 9% at the top line, but margins are under pressure. Just want to understand why and what's the outlook both on revenue and margins for FY26.
So margins mainly under pressure because of the investments in growth areas. That includes hiring of people to allow us to really get into more commercial roles and sales. That was a big investment we did last year, which we shared with you last year. And the results of that has started coming. We are getting RFPs that we had not gone before. We are building relations. We are adding logos that we have not added before. And that was a one-time deliberate effort to invest in those resources that is putting an impact on the margin. In terms of growth this year, all 3 segments of the business are targeting to growth. We are talking about accelerated growth that we will deliver this year, and margins will be in 30s that we are committed to grow and take the business to.
That's a solid margin, 30% plus. Mr. Sharma, good morning. Prashant here. Are you, nowadays my go-to question for CDMO or companies like yourselves is whether you're working on a GLP-1 or are they your customers in any which way?
So
can you tell us?
Yeah, no, we can. We have a lot of customers. GLP-1 is not of them right now, but things changes. But we're very excited with the current customers we work with. They solve a lot of complex problems in oncology and diabetes and CNS. And we see a lot of opportunities with them to continue to grow and create value. GLP-1 is aspirational for us, and we hope we will be able to crack that at some point.
It's attractive. I mean, if reports are to be believed, it will be the largest category of drugs, right?
Yeah, that's right. But listen, I mean, there are others that are also increasing, and there's a lot of
course.
money going, right? So ADCs is still a very hot area. Oligo is coming up, and there's a lot of hot areas. And I'll be honest with you, we can't do everything that is required, right? So we have to do what we do, we have to do good, and that's what
Obviously.
we focus on. And if there's opportunity to acquire a GLP asset, we'll be happy to do that. Organically, we can do limited work, and we're working on that. But right now, focus is on growing what we have and making it better.
Okay. So let's talk about the CDMO business. I mean, overall, you've said, I think in the investor call as well, that you will be targeting double-digit growth this year. If you could kind of give us some more color, will the CDMO business grow in like early teens or mid-teens? And as you get more logos, more customers signing, and I think you have a lot of requests for proposals as well in the pipeline. So just tell us, at what rate will this business grow, and what is the steady state, sustainable margin profile for the CDMO business in particular?
Yeah, so growth is a reflection of efforts that the team does. So we have a very strong pipeline of early stage projects that are moving up and will become commercial. So we've been publicly saying that we are sitting on 9 phase 3 products with 15 projects that have been working on with all innovator companies. And happy to share that 4 projects out of these 15 are getting commercial this year. So that will be a contributor to the growth. We have also signed RFPs recently from a very large pharma company that are moving its commercial footprint from China to India. There are phase 3 projects in that RFP, and there are some commercial projects in that RFP, and we expect to hear some result and outcome of that in Q3 of this year. So there are multiple drivers of growth. Now, this is in addition to the organic work that we do, the R&D early stage work, right? So that will do. In terms of margin, so, there are efforts going on. We're adding logos. We've just added a logo of a top 5 pharma company. We're doing some early stage work with them. We've done 3 projects for them. They are visiting us in Hyderabad later this year to qualify.
Out of all your clients, sir, what is total US exposure right now? I mean, if I try and understand this as a percentage of your CDMO revenue, how much is coming from US-based pharma companies?
So we have several US customers, but a significant portion of our business goes to Europe. Okay, so larger customers in Europe, quantity of customers in US is big, but the value of them are small right now.
Okay, and the CDMO margin? So just very quickly, 10 seconds.
Mid-30s is what we have been guiding, and will remain guidance.
All right. We'll speak again, sir. Thank you very much for joining us. Appreciate you being here on the program. Thanks indeed.
Thanks a lot.
Well, let's